Hi, my name's Chris Tubby. I'm founder of Trading for Tomorrow, and this is just something I do every week just to try and help you guys prepare for the week ahead. So I'm going to start with some macro and then move on to some charts of some of the products that I trade. Okay, so the first thing is to look back a little bit at what happened last week. So, I mean, when you look at sort of a couple of 2-3 weeks ago, I mean, the stocks had that big sell-off. Everyone got a bit panicky over the unemployment level jumping in the US. But since then, it's been a good recovery. So, I mean, the US data sort of is showing that consumers remain optimistic. They're willing to spend regardless. But of course, a lot of that sort of COVID cash is a distant memory now, and are having to use savings, credit cards, and buy now, pay later, or just more sort of normal bank loans. And sort of Wall Street's recent panic, it's in the past now, and many are now back to sort of expecting a soft landing. To be honest, I'm not so sure, that it's going to be super soft. I mean, recession is extremely doubtful, as I've mentioned the last week or two. Although, technical recessions do occur despite a solid economy. If you look, it happened a couple of years ago in the States. So US stocks rallied all week. The dollar went in the opposite direction. Again, as traders become more confident of, the Fed rate cuts from September. And it's probably more a question of if it's only going to be 25 basis points or will they go for the 50 basis points. Gold was sticky around 2,500, but it popped Friday towards the close. And it made a new contract high, almost 25.50. Now, potentially a little bit of sort of geopolitical tensions encouraging the buy in there ahead of the weekend. Then WTI couldn't hold on to Monday's gains. It got up to 78.5, but then it dropped $3 lower and closed the week around 75.5. Bitcoin traded either side of 60,000. And I think part of this is due to sort of the US election having an impact on it. Some expect, I would expect to move after each of the televised debates. Just proves I'm not AI. And that's going to depend on Trump's performance against Harris. It's a close call at the moment for the election, and there's just not much between them on the polls. However, we know that they can be very wrong when it comes to the actual election itself. So US consumers are cutting back in certain areas such as travel, and it's understandable because their sort of household budget sort of is remaining a challenge. You've got to get used to these higher prices. They're not going back down very much. And of course, grocery inflation is up over 30% in 2 years. That's due partly to higher commodity prices, wages, transport costs. And of course, remember, around 80% of all goods are shipped by sea. And those costs have been going up for containers, having to go the long way round rather than taking the shortcuts because of what's going on in the Middle East and such like. And then we shouldn't forget the profiteering, of course, as companies boosted their profit margins. On top of that, we've got higher rents remain a problem for inflation too in the US. Now, Powell's going to be speaking this week at the Jackson Hole Symposium. And, although inflation is falling slower than he would probably like, and jobs seem a little bit more vulnerable now, and we saw that with the last unemployment rate jumping to 4.3%. Data is seeming pretty favourable, and I'm sure he can afford just a little smile this week when he speaks. The markets are also waiting for Iran to retaliate against Israel. The question there, I guess, for me is, will they act themselves, or will they sort of pretty much get Hezbollah to do it for them instead? And then, of course, Ukraine hit a Russian oil depot the weekend. They're pushing deeper into Russian territory of the Kerch region, forcing some 120,000 from their homes. And, there's, more troops and drone attacks going to be expected. They're pretty much taking the war to Russia now. And, of course, for me, I'm full of questions, aren't I? Because that brings up another question now. What is Putin going to do? Could he escalate the war and introduce weapons that he's sort of been holding back? That won't be nice. But if his back's against the wall. Also, he probably feels a little bit under pressure, he needs his back against the wall because, the way things are going at the moment, I'm sure some of those that are very close to him will be unhappy with those recent events. Just taking a look at China, so obviously China's economy's not been doing too great. Now they're going to be sort of hoping that those outflows from investors will slow down, because at the moment they're on course for a net outflow of funds this year, which will be the first for over 30 years. Now, it's not really a surprise because, China is significantly lagging behind the US economy. It wasn't that long ago we had thoughts of them potentially overtaking the US in the next few years, but then sort of COVID turned all of that around. And that's going to be on hold for the foreseeable future, I think. Lending in China contracted for the first time in almost 20 years. Now, part of that, lower global demand, a weak property market, and of course local government is linked to that property slump, and they're sort of hampering any recovery, and of course a lot of investors are switching to India, and of course concerns over tech security and all that come up as well. Then the Chinese stock market lags with prices close to 2019 levels, and only a few high profile investors sort of are keeping the faith at the moment, I think there. Right, so where do we go? So COVID. Okay, so COVID's done, forgotten about almost. Isn't it amazing how quickly we forget about these things, move on? But now there is this Mpox, and that could spread from Africa. That's of course unless vaccines are quickly donated. It's sort of estimated that the cost of that is going to be around about 4 billion. And of course, when you think of what happened with COVID, it's got to be a price worth paying. Now, as I mentioned earlier, the highlight of this week will be Powell speaking. But there's also the FOMC minutes released on Wednesday. And there's a lot of other data out as well, but I'm sure all you guys have got your own sources for that, so I'm not going to bore you as I usually do and go through a lot of that. Instead of that, there's another couple of slides, and then I'm going to move on to some analysis for you. Now, I just want to sort of just talk a little bit here about my services that I offer. So there's a daily newsletter that includes global news, headlines, my views, full articles. That is a subscription service. There's one-day workshops. This will help you to discover if trading could be your next career or even just a second income. Otherwise, maybe you're already trading, but there's a few gaps that you'd like to fill in, and I can help you with that because that will accelerate your trading and your performance. And then there's a 1-week intensive course, that's going to make you feel competent and confident after just 1 week. It's going to give you those foundations that you need to build your trading career on. And, if you've got that in a trader, we'll find it. And now that does also include a free trading challenge. Then I do a Flexi Masterclass, which includes 6 weeks of guided learning. They can be split up, you know, you don't have to take them all at once. And this is designed to provide you with all the knowledge and trading tools that you're going to need to navigate any market and also on any asset class. You know, I trade them all. And as I say, you know, you can spread those weeks out over months if you need to. It's no problem for me. And again, that does include a free trading challenge. Now, trader mentoring, I'm doing more and more of this. And you know, this is to help you reach that next level time and again. And you know, I'm doing much more in the way of one-on-one sessions right across everything that I'm doing now, rather than sort of looking for big groups. I do provide a lot of trader educational content to individuals, exchanges and brokers. And as you know, as I mentioned earlier about the trading challenges, you know, if you're looking for a funded trading account, then you know you can contact me for details just about the ones that I use, or you know you can sort of take one of the courses where I'll give it to you for free at the end of it. Okay, so then moving on to our disclaimer, just to make you aware that trading does involve the potential risk of loss of capital and is not suitable for everyone, although hopefully it is for you. And many companies provide leverage, so just be aware that you can lose substantially more than that initial investment. Everything I include in here is just purely for educational purposes. I'm not trying to encourage you to trade or invest. That must be your decision. And of course, you know, before you make that decision, you've got to consider the risks involved, definitely your financial situation, your level of experience, and your risk appetite. And of course, it's important that you only risk capital that you're prepared, but also that you can afford to lose. And if you've got any doubts whatsoever, seek independent financial advice and do that before you risk your capital. So many people come and find me after they lost money, which is sad. You know, they should come to me before. And yeah, so listen, that's it for part one. I hope to see you in part two, where I'm going to do some technical analysis.